Hello everybody, Randy Patrick here. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it now, As the Virus Turns. Another episode we got going on here, but today is different. Today is a public service announcement. Don't do this during the coronavirus pandemic, all right? What am I talking about? I'm talking about forbearance. I said the other day we're going to talk about forbearance. We're going to talk about it today. Basically go through some of the process, try to understand what's being told or said to us and broadcast in the media, and I'd like, my goal today is have people understand what they're getting into with respect to forbearance, because I can tell you basically what I've been reading and seeing, what you may interpret or what other people may hear out there is not what's going to happen in the real world. People are going to get caught and they're going to think things are great. It's not going to be that way. All right, so let's sort of hit this right now and get to some conclusions here. Now, my disclaimer is I'm not providing anybody advice in this. Okay, this is a sensitive topic. If you need to engage your lender in a forbearance opportunity here, then by all means do so. All I'm trying to say is that call them, talk to them, understand what you're getting into, understand what it's going to cost you in the end. Make sure you have all the information before you decide to do that. All right. Now, why there's a problem out there with understanding this situation is because there's a lot of proposals being bantered about and talked about from HUD, Housing Urban Development, Fannie and Freddie, FHA, mortgage industry people. And I've got an article here. It says, mortgage industry lays out its case for widespread coronavirus emergency relief. All right, so there's a group of people that wrote the government a letter, all right? Mortgage Bankers Association, American Bankers Association, Consumer Data Industry Association, Experian, TransUnion, Equifax, Structured Finance Association, National Mortgage Servicing Association, and U.S. Mortgage Insurers. Okay, so these groups represent mortgage companies, mortgage insurers, things like that, and they're looking at, they want, and then what they're doing is they're suggesting to the government ways of handling the situation with respect to having 3 million people plus file unemployment and the onslaught of this unemployment wave we're going to have and non-payments of mortgages in the near future. So this is what they're asking for. We're going to go through this right now. Again, this is not guaranteed. This is not even agreed to. This is just the ask. This is the put. All right. The group's plans call for mortgage servicers to be able to provide affected borrowers with a 90-day break from their mortgage payments, but the group notes that the forbearance period could very well be extended to a year, 12 months. Okay. The group also calls for forbearance protections to include no negative credit reporting, no collection calls or letters, no late fees. Additionally, the group asked that payment forbearance be made available to all affected borrowers, including those that had already had defaulted payments prior to the coronavirus situation. So not only today and what's happening the past couple of weeks, but if you were already in a situation 3, 4, 5 months ago, they want it to apply to you as well too. That's very nice. All right, here's some more information. According to the groups, the program would mean a deferral of a mortgage payment, not forgiveness, so please realize that. In most cases, the group says, missed payments would be made at the end of the life of the loan, and there would be no interest accrued on the deferred amount. That sounds pretty good. Additionally, the group calls for the elimination of or streamlining of all documentation requirements in recognition of the limited ability to compile and or contact third parties for access to documents in this widespread event. The group also calls for a limited direct customer contact, including the use of online web-based portals, emails, or other electronic means when applying for mortgage relief rather than by telephone to address staffing constraints caused by the broad-based shutdown. So this is all very nice. So this week, this letter was sent to the Department of Treasury, Federal Reserve, Consumer Financial Protection Bureau, which is CFPB, Federal Housing Finance Agency, FHFA, and Department of Housing and Urban Development, which is HUD. So what they've basically asked for is the fact that anybody could just contact their lender easily via an email or clicking something on an online web portal asking for a deferral of up to 12 months with no documentation provided, no communication other than clicking a mouse, and at the end of all this, they're going to take my loan what I've missed and put it on the back of my mortgage. All right, so if I miss 12 months worth of payments, they're going to tack additional 12 months worth of payments on the term of my loan that I have right now. Well, that's kind of a nice ask. And really, what would happen if this was available? Every single person with a mortgage would do this, right? Whether you're currently in default or going to be in default with respect to what's happened financially with the coronavirus, how it's affected you personally, everybody would do that. So I don't think it's really a good idea. This would sort of, bankrupt everybody, and I believe this would cause the implosion of the housing industry, the mortgage companies, servicers, whatever. So that's not going to happen. But this is the ask. This is the put. So people have to understand that this is not what's been agreed to whatsoever, and to not assume that this is going to happen. This is my fear, is that people who just hear this in passing or read this very quickly or are being told this from other people, their real estate agents, whatever, they're going to make decisions without knowing what's going to go on or what's going to happen in the future, and they're going to be caught and they're going to be hurt. Why am I concerned about this? Because having had a lot of experience with the last housing crisis, this is what happened, all right? The government said, we want our lenders to work with homeowners in distress. We create these programs, HAMP and all these things to help homeowners. Well, you know what? It was slow in coming out. It was difficult in rolling out to the distressed homeowners, people who needed it. The horror stories I heard about people faxing or emailing or mailing all their documentation, uploading it. It was lost so many times. Stuff just never happened. They lost their homes to foreclosure. They couldn't get through to CSRs at the lenders and the whole bit. It was a big mess. So if everybody does that, we're going to have a big mess again. So what was just spoken about here is the ask. It's not what has been agreed to whatsoever. So please keep that in mind. Don't make decisions based on what you think you heard in the industry. So don't do this without checking out what truly is going on with your specific lender. All right. Now, a lot of this is this is discussion with the GSEs, the government sponsor entities. This is maybe applying. Well, this is of course for, I guess the letter went to all these people, but realize that some of it's going to apply to FHA government-backed loans. Some of it may not apply if you're not a government-backed loan. So you have to find out what your situation is and contact your lender directly to figure things out. So basically, to me, that's the biggest concern, is now to give someone a scale of this, which I think is important. To give one a sense of scale, if 25% of the nation receives a forbearance for only 3 months, servicers will have to cover payments of roughly $36 billion. If they received it for 9 months, then the cost would exceed $100 billion. So think about this. If 25% of the people, again, did a 3-month forbearance, that's $36 billion. It's just going to balloon out of control, all right? So having said what they've asked for, I would guarantee that more than 25% of mortgage people out there would be jumping on this. It would implode the government. It would implode the industry. We'd be looking at massive bailouts once again, and it would be chaos. So this really can't happen. Please keep this in mind. To further confuse people out there, Fannie Mae and Freddie Mac said what they would do right now. So this is what I just spoke to you about was proposed, right? Please understand, not carved in stone, not guaranteed, just proposed in a letter as ideas, right? This is what's offered right now. A recent report from Goldman Sachs suggested that a record-shattering number of people are filing for unemployment as the coronavirus cripples the economy, which will, basically cause a massive, delinquency and missed payments and mortgages. So the solution that they're talking about here would require some legwork. The two biggest sources of mortgage financing are giving some leeway to borrowers who fall behind. So Fannie Mae and Freddie Mac unveiled today a new payment deferral option that will allow borrowers facing a hardship to defer 2 months of their mortgage payments until the end of the mortgage. Okay, this is a plan unveiled by Fannie Mae and Freddie Mac, so it's real and exists, but realize they're saying only 2 months deferral. The program was set to be announced later this year, but with the coronavirus wreaking havoc on the country, the GSEs are rolling out the program early to give mortgage servicers another way to help borrowers right now. So that's interesting. The payment deferral option isn't only available for borrowers facing a coronavirus hardship. To be eligible for the payment deferral program, borrowers must have faced a short-term hardship that caused them to miss 1 or 2 months of mortgage payments. So if the borrower is able to resolve the hardship within that time frame and has the financial ability to restart their mortgage payments in the full, the borrower will be eligible to defer those 2 months of payments to the end of the mortgage without needing to significantly modify the loan. Let's be clear here. 2-month deferral. On the 3rd month, you're paying your normal mortgage plan, okay? So what it's going to do is allow them to defer that to the back of the loan without needing to significantly modify the loan, okay? That is available, which is great. You're going to have to contact your lender to get this, okay? There's no click a mouse on a website or just they're going to assume that I've fallen into this program. You're going to have to ask for it and qualify for it. But I think it's interesting that they're only offering 2 months right now that can be put to the back of the loan, because I don't think they can do more than that based on how loans are structured in pools and tranches, all right? That's another discussion. But realize they say this, that they can do this without needing to significantly modify the loan. So this is a quick short-term fix for people who need it, who can jump and go back into their mortgage payments. If the expectation is the majority of the people won't be able to go with 2 months and then start off their payments because it may take longer, this isn't going to work for them, all right? But the key here is that significantly modify the loan. What's going to happen is some of these programs that will be made available just won't work for people because it just can't work versus what the lenders can offer and what they're allowed to offer with all their financial constraints and loan constraints and these mortgage pools and whatever to what's going on in the real world. So the two never meet up. That's why a lot of the mortgage modifications that were attempted back in the last housing crisis and even recently don't work for people, because what the lender can do for you fits into their box. Your situation may not fit to their box with what you can afford or what can actually happen. That's why I say to people, please be careful that this is unique and this is great, but it's a very, very short-term fix for probably a very small percentage of the population that will have a little blip in their financial situation and they can start making their mortgage payments. Simple as that. At Freddie Mac, this is a statement from Freddie Mac, we recognize that some borrowers experience temporary financial hardships resulting in an early stage delinquency that cannot be resolved by a reinstatement or a repayment plan. So a repayment plan is, hey, take what you owe us and distribute it over a number of months. You're actually paying more per month to get to it. You see what I'm saying? But also do not require more extensive modification of terms that a Freddie Mac Flex Mod would provide. The payment deferral is designed to provide relief to eligible home or borrowers who have the financial capacity to resume making their monthly payments, but who are unable to afford the additional monthly contributions. Okay, so eligible borrowers, which means you have to be qualified to get this, you have the capacity to start making payments, but can't bring the deferral stuff back into play here. So again, it's about qualification and qualifying to fit in their box. So please realize that this is what's going to go on right now. The government, lenders, they're going to say things to number one, calm the masses, make, not contribute to the hysteria of what's going on out there, trying to keep people, at least, engaged. In the end, what will be available, what plans will be available, how it's all going to roll out is still a mystery. So that's why all this talk about forbearance and how it's going to work out, please don't think you're going to just walk clean into this and walk away clean as well too. It's not going to happen if we take a look at what's happened during the previous housing crisis. So just keep that in mind. I'm not trying to scare anybody. I'm not trying to cause additional stress or hysteria. All I'm trying to do here is say to people, please be careful. Please understand what you're getting yourself into. If you have to go down this path, look at all your options and see what is available to you. That's all I'm trying to say to people, all right? I don't get any benefit out of this. I just want to make sure that people aren't being hoodwinked or bamboozled by, quick media reports or people that they talk to in the industry who think they know what they're talking about when really it's not the case. And again, to me, the key word is government is mandated to work with you. I can work with you if I'm your FHA lender. I'm offering you a modification. It just doesn't work for you, but I've worked for you. I've done what I've been mandated to do, and therefore it just doesn't work for you. I apologize. I'm sorry. So what was said maybe has been satisfied. The result is not what we've intended to happen. So again, keep that in mind. All right. To put it simpler terms, GSEs will allow certain borrowers to defer 2 months of their mortgage payment until their mortgage ends, or they sell their house. Simple as that. All right, enough of it. Again, more information is obviously going to come out about this, and I'll keep on top of it, and we'll talk about it in the future. But right now, I know I've actually seen people on YouTube with their videos saying, "Oh, we're so happy. We don't have to pay these next 3 months until 30 years down the road." That's not going to happen, people. All right. If it does, great. But right now, that's not been figured out. Just to keep things in perspective here, what do we have during the last housing crisis? We had Tarp, which was the I don't even know, something, I even forget it now. It was something Acid Relief Program, okay, Tarp. I forget what T stands for. Okay, I'll look at that. But basically it was the bailout, okay? So billions and billions of dollars were given to Fannie and Freddie, lenders, automakers, whatever, for the whole bailout. So do we see a bailout coming in the future? We probably do. Ginnie Mae, another GSE, weighs bailout for servicers after major mortgage lender slashes 70% of its workforce. So what's happening now is that lending is going to tighten up, because now we have all these people who are not working, they're out of jobs. What do is when lenders get spooked, they tighten up and they increase the criteria, and they make it not easy for people to get loans. So we have the segment, we have the qualified mortgage, which is QM, and we have the non-qualified mortgage, the non-QM segment of the business, all right? So the people who participate heavily in the non-QM segment are what's called non-banks or shadow banks. Those are lenders that don't have FDIC insured deposits behind them, right? So they offer loans and programs. They don't have deposit accounts or checking accounts for their clients. A little different structure here. But the number one lending force past 3 to 4 years has been the non-banks. Quicken Loans, Rocket Mortgage, PennyMac, Caliber Home Loans, Carrington Mortgage. There's a whole slew of them I don't even know out there. There's a bunch of them. They've lent billions of dollars to this non-QM segment. Now, nothing wrong being in the non-QM segment. Your stated income, you own your own business. You don't fit into the W-2 qualified mortgage box. It's just different. That's entrepreneurs. That's owning your own business. That's independent contractors. There's different ways of earning income. You don't fit in that box. So what's happening now is this group, so they originate the loan and they sell that loan to other investors in the secondary market. Well, these other investors are going, well, we don't want to buy those loans because we think we're going to have problems now with this segment, this market, as time goes on. So we're going to take a pause here and not originate loans for the next little while. So people have emailed me saying that, hey, my house is going to be sold. It's put on hold now. What do I do? So people who are going to buy these homes can't get the loan now because the underlying investors for these originators are pulling back and saying either stop, we're just going to wait to see how this hashes out, and or it may come to the fact that they just disappear because they go to business, or they will eventually write loans with different criteria, so with less risk, obviously. So that's what's going to happen right now. So people are predicting another bailout because some of these large we'll call it non-banks, they're slashing workforce now because if their investors aren't investing, they can't write mortgages, therefore they can't fund their operation. So it's just, again, another domino effect here. So more people are going to have issues. So please realize that we're going through a lot of stuff right now. And as the quote is, the world has dramatically changed. So yes, the housing market is changing. It's changing as we speak. It's going to hash itself out in the next few months, and we'll figure that out on the fly. But it's a different market. And this is another reset of what's going on right now. We have to slow down and re-underwrite in the new world that we're in. That's going to take some time. It will take some time. So if you were pre-approved for a mortgage from some of these non-QM lenders, that's pre-approval is probably null and void now. You're probably going to have to get reapproved if you're looking to buy a property. Simple as that. And again, some of these large people were funding, $8 billion worth of loans last year. They expect that maybe they'll fund a quarter of that this year based on what's going on. So what we have right now, and it's very unfortunate, is a lot of uncertainty in this market. We don't know what's going to happen to, and again, I can commiserate with people. You don't know, some people don't know how they're going to feed their families. That's a situation, all right? So this is, again, trickle-down domino effect of all these things are going to hash out. Once the virus gets stabilized and some of the restrictions get lifted, we'll sort of get back to a normal starting point. When that's going to occur, we don't know. It's going to cause havoc for people. So as I mentioned, please check out your options with your mortgage company or your servicing company, your lender, whoever that may be, bank. Understand them before you engage them, before it could hurt you down the road. All right, that's all I'm trying to say right now. So again, having said that, thank you once again for the views, the likes, and the comments. If you're not already a subscriber, please click the bottom right button, subscribe to my channel, help my channel grow. A lot of videos, a lot of views been happening the past few weeks, so I do appreciate that. Self-promotion here, of course. If you need assistance with respect to understanding what's going on in the housing market, drop me a line, send me an email, put your phone number in. We can hook up via text, email, talk on the phone. I'm happy to do that. If you're looking to invest, and why I say that is that as much as now we're in tough times, this to me is the housing bubble is bursting. We're now going to boom, bust, crash, crisis. We're going to be hitting this right now. I think the volume is going to dwarf what happened in the last housing crisis. But some of the players have changed and some of the things have changed. So it's not going to be the same as the last housing crisis. There's different ways it's all going to go down. So if you want more information on that, drop me a line. I do have training products out there, advanced training for what's going to happen the next little while, which we're sort of gearing up for. Also, if you're looking to invest right now, I have a ton of off-market properties and relationships that I've engaged in. And this is the one thing about, when property values decrease, all right, what sort of maintains is the cash flow. So you can get great deals on investment properties right now and cash flow them, because I can tell you that rental properties will still be in demand. They were in demand through the last housing crisis. They'll be in demand through this housing crisis. All right, there's always a good deal to be had out there, and more people will be hitting the rental marketplace if they're losing their homes through foreclosure and things like that. So that market never goes away. So anyway, thank you very much for everything, and we'll look forward to speaking with you in a couple of days. Just an FYI, I am recording this video in advance of its release. Number one, I'm going to be busy the next couple of days working on properties. So I just wanted to get this out there because of the amount of questions that are coming about forbearance. So realize that if something happens the next couple of days, I'm going to get to it probably Wednesday. This will probably release on Tuesday, and which it will be Case Shiller Day, by the way, end of the month on a Tuesday. And then I'll probably have something coming out on Wednesday. So take care, everybody. We'll talk to you soon.